and our vacancy rate is in line with the market at the moment at 0.4%. The median rent for houses is now up to $650. That's a 14% increase over the last year. So over the last 3 months, Perth has had the highest increase in its CoreLogic index at 6% in a 3-month period. That's crazy, isn't it?
Welcome to Perth Property Insider, where you will learn how to grow your wealth and improve your life using Perth Property. Our show is brought to you by Investors Edge Real Estate, the highly rated and award-winning property management, sales and buyers agency servicing the whole of Perth. Now, here's your host, Jared Mann.
G'day and welcome to Perth Property Insider. I'm your host, Jared Mann, and today I'm bringing you my Perth property market update for May 24. Only the second time I've come to you this year, and I've got so much to fill you in on for both the sale market and the rental market, what's actually driving our market, and my crystal ball for the year ahead. It's going to be an awesome episode, so let's get stuck into it. I've called today's episode No End in Sight, and the reason for that is I'm continuously getting asked, Jared, are we nearing the top of our market, or, is it still worth buying? My answer is no, we're not nearing the top of the market. I believe that we've got at least 1 to 2 years ahead of us, and there's still an opportunity for people to get in and get that bit of growth before we round things out. Could go on for longer, and you'll then be insulated, and people think, oh, I'll wait until things come back down, but I think we're going to go much higher before we start to cool off, and I don't think we'll be at these sort of prices again. So no end in sight is what I'm calling things. Let's go into all of my reasoning and analysis of the market now as to why. So let's jump into the Perth sale market. We're down to an absolute record low of number of properties listed for sale. This is just absolute insanity. We're at 3,511, and it's continued to sharply decrease month on month this year, and we're 41% down on the number for sale compared to last year. So no end in sight to that trend reversing at the moment. There's just incredibly low stock levels, and that's obviously limited supply, lots of demand. Prices could only go one way still. When we look at the number of properties being sold, and that's the demand side of the equation, we've been tracking between roughly 900 and 1,000 consistently over the last few months. So very consistent and strong demand from buyers. It's only slightly down by 5.8% on the number of sales happening per week compared to the same time last year. But of course, the number being sold is going to be slightly down when there's so little properties now to choose from, 41% less than we had last year to choose from. So when we look at the actual inventory, the inventory is sitting at 0.99%. So there's only 1 month of available stock on the market at the moment. So tight. And that's 37.5% decrease since the same time last year. Now, what's been happening to the median house prices, and is this limited supply and ever increasing demand, is it pushing prices up? Well, we've seen the median house price take a jump recently to 640K. That's its all-time high for Perth. And the median unit price has upticked a bit too at 430, but you'll notice the gap is increasing between houses and units. So $210,000 gap at the moment. This is certainly looking like more and more value. And I did do an episode, a few episodes back, on what would you do if you had less than 600K to spend. I'd be starting to look at villas and units now, and they will be playing catch up in the coming years. But longer term, you're going to be better off with a house if you can still afford above 600 to get into one. And what was noticeable as well is that the median land price has taken a tick up to 269K for the first time in recent history. And that's notable because what people are actually starting to come around to the idea of building. The more and more that established prices go up and the less supply there is, people are going to start moving across to chasing down land and building properties. So I really want to keep an eye on this median land price to see if pressure starts in that segment of the market too. So before this cycle plays out, we're going to see big increases to the median unit price, and we're going to see big increases to the median land price. And I think that's going to be signs that we're nearing the top of our market once those other two types of properties have also increased. But I believe the house prices have still got a long way to go too. And in my episode that I did on what do you do for less than 600K, I did analysis as well of what I think is likely to happen for houses worth checking out, and that we're still very undervalued. So when I look at the median selling days, we're at just 8 days at the moment. That's absolutely crazy, isn't it? So that means that half the properties, or not half, but probably about a third of the properties are coming on and selling before the first time open. The majority of others are then selling within a couple of days of the first time open. Now, that's the tightest market in the country. That is absolutely crazy. So you have to act super quickly if you want to secure something. And I'll go into a little bit about how we can help with that towards the end with our buyer's agency service. Getting some great deals in this market, getting access to some pre-market properties, off-market properties, and pouncing on stuff as soon as it comes on to secure it ahead of other buyers. So the Perth rental market, let's go into what's happening in there. And we've actually seen a little bit of an increase in supply, only by 12% over the last year. And perhaps if that's a result of more investors buying in Perth, increasing that supply. And we're still only talking such a small increase of around 300 extra houses for rent compared to the same time last year. So it's very nominal compared to how tight the market is. But it could also be because of the state governments, some of their policies around, getting some extra rental properties on the market and paying landlords who have a vacant property $5,000 to return their rental property to the long-term tenancy pool. So if you want to look at some of the policy impacts, check out the last episode for a rundown of the state and federal budget. But really no major change in the supply, and it's still super tight with a vacancy rate of just 0.4%, which is just ridiculous and crazy tight. So it makes it hard for tenants and buyers who want to upgrade and rent in the meantime. Perhaps makes it very hard for them to do things at the moment. And we've seen a 20% decrease in the vacancy rate since the same time last year. And our vacancy rate is in line with the market at the moment at 0.4%. So the median rent for houses is now up to $650. That's a 14% increase over the last year. Our average rent of our portfolio is $580 per week, so we're continuously renewing leases and increasing in line with market in every case. And $650 per week, well, who would have thought we'd be at this point when our lowest point was $350 per week in 2018, so a $300 increase over that time. And yes, it does feel like a lot to come when we compare with where our lows were. But when we consider overall average increase over the last 10 years, it hasn't actually been that great yet. Rental price peaked at around $470, $480 in 2013. So we're not that much further. Well, we're still reasonably above that. But when you calculate the average growth rate on the rent, it hasn't been that high. And that's why I also think there's more potential for increases, and certainly all the underlying fundamentals are not showing enough of an increase in supply, and the demand is keeping up. So that's going to keep pressure on increasing rents. Now, the rental inventory is at just 0.91 of a month as well, super tight, which means there's only less than a month of available properties on the market at any time. So super tight rental market. Now, let's go into the property clock and have a look at what's happening around our various capital cities, because, as you gain experience as an investor, you notice how the what's happening in the various capitals all has an interplay to affect us here in Perth. When we represent really great value, migrants are going to want to move to us, investors are going to want to move to us, also chasing good rental yields. And so it depends at any one time how we sit compared to the other capitals and what's happening in them, because that's also going to have a big influence on our market. So some big changes since I last came to you with my update in January. Brisbane, Melbourne, Gold Coast have all moved around to being categorized as a rising market, and along with Sydney. So interesting that our major capital cities in Australia are now all in this rising market. We've got Adelaide, Brisbane in there as well, Sydney, Melbourne, and Perth. So pretty crazy. I don't actually recall ever seeing all the capitals in a rising market stage at the same time. So in my mind, if Brisbane, Melbourne, and Sydney and Adelaide all start growing again, that's going to give Perth a longer runway. And even though we're growing faster, it's going to mean that we've still got longer to go relative to the other capitals. If they increase, we're still going to be attractive to migrants and attractive to investors. When we look at units, they've reclassified Melbourne and Gold Coast and Brisbane all in a rising market too. So it's a very similar case for units as it is for houses. And I don't recall ever seeing that in my 10 odd years of preparing these market updates, that units and houses are both categorized in the same area of rising market. Normally, Perth and other capitals have their unit markets trailing by 12 to 18 months, and they're now is sitting in the same classification. So you'd have to say an overall very positive outlook for the whole of Australian capital cities. Now, let's look at how things have transpired over the last 3 months and 12 months among our capitals. So over the last 3 months, Perth has had the highest increase in its CoreLogic index at 6% in a 3-month period. That's crazy, isn't it? I mean, if we annualize that, that's going to be 24% growth if it continues at the current rate. And out of all the other capitals, no one is anywhere near as strong. So Adelaide's had 3.3 in the last quarter, Brisbane 3.1, and then we've got Melbourne at 0. So really that's just sort of starting its growth phase, and Sydney at 1.1. And when we look at the 12-month changes, Perth has led the pack again, and it's exciting to see it finally getting its time in the sun, isn't it? It's had 21.1% increase in its index price. Adelaide with 14, Brisbane with 16, Melbourne with 2.8, and Sydney with 8.7. Does anyone care about Darwin? Well, you can see my slide if you do. So when we look at the actual segments that are growing the strongest, and we look across the country, in each of the capitals, the lower 25th percentile, or the lower end of the market in each case, is growing the strongest. So that's really a sign of the times that with people chasing affordability, rising household costs and higher interest rates, it's really driving that lower end of the market, which won't continue forever, because as that end of the market becomes higher and higher priced, it's flowing up to the middle of the market. Now, our lower end of the market has had a 3-month change of 8%. So if you annualize that, that's 32% equivalent annual if it keeps up at this rate. So it's not going to continue forever, but there's a strong uptick in the middle of our market now with 6.7% change. And I'm also seeing an uptick in the higher end of our market here too. So that's much higher than we had in the previous quarter to January. This is at 4.7% now. So interesting that our 3 parts of the market are pretty much stronger than the majority of the other sub-markets across the whole of Australia, and that our lower end market is still driving strongly. Now, capital city rental yields, let's take a look at, what sort of a return on your money you're getting around the capitals. And Perth still has the second highest rental yield with 4.5%. Darwin's the only one that's higher than us at 6.5, and you'd have to say that the volatility and what we've seen in Darwin over the history, it's even far more volatile than Perth, and investors are really staying out of there, and they're certainly coming to Perth in favour and getting this slightly higher rental yield. When we look around the country, Hobart has 4.3%, Canberra 4%, Perth had 4.5 if I didn't mention it, Adelaide 3.8, Brisbane 3.9, Melbourne 3.6, and Sydney 3.1. No surprises there. Very hard to hold a property in Sydney and Melbourne still, really. So when it comes to factors affecting our market, let's dive into these and see what's currently driving things. it's going to be interesting. So I always like to start with the economic clock and get a sense for what the interplay between our share prices, our interest rates, our property values, our monetary supply, and our commodity prices. So I'm still putting us between 6 and 7 o'clock. The key thing that'll show that we've sort of moved on in our cycle is interest rates falling, and we're all sort of waiting for that. But interestingly enough, when we look ahead and what else is ahead in the economic clock, one of the next parts to it was the rising share prices, and that's actually happening now and has been very strong over the last 6 months. So sometimes these things are a bit out of order, and further around than that, we've got easier money. So it's only a matter of time before interest rates do start falling. How close are we to the top of the share market? I'm no share market analyst, but I certainly like to see where it's at because of the interplay with houses. So we'll go into that in a minute. Finance-wise, when we actually look, has anything changed interest rate wise since I came to you in January? No, there hasn't. We've had a series of holds, and we've only had one increase since November last year. And really, when we look over the entire year, we've had only 3.75% increases. So the majority of the increases were done earlier than that. And when we project forward, the ASX is pricing in a 0.5% decrease over 2025. And one of the bigger changes in what the market thinks is that we're unlikely to start seeing rates decrease until the start of next year. They were sort of originally tipping that there might be some decreases this year, but really it's only really just getting deferred, and it's more looking like rates are going to start decreasing next year. So the neutral cash rate is typically considered between 2 and 3%, and it's at 4.35% now. Actual rates on offer from banks is 6.5 to 7.5%. So if you're not in that band with your loans, make sure you speak to your finance broker and look to refinance if possible, because interest rates are going to have a big bearing on your overall cash flow. Let's go deeper into the actual lending that we're seeing per state, and these stats are to March. So the homeowner lending in WA has continued with a strong sideways trend, very sort of consistent, and there hasn't been a slowdown in that. When we look at some of the other states, it's all very consistent in those states too. So the homeowner or the upgraders are really sort of holding up the market and keeping it strong in all the capital cities around Australia. When we look at the investor lending, interesting that Perth has continued to slowly increase in investor lending, and we've now surpassed the sort of monthly lending levels that we had back in 2015. So we've actually surpassed that, and we're getting close to the lending sort of levels that we had in March 2006. And arguably, we've got some catch up to play because we were down for so long. So I think this lending's going to continue for investors for quite some time. And when we look around the other capitals, we can see a noticeable decrease in Victoria. And I think that's a big part to do with the state policies and how difficult they've made their Residential Tenancies Act and their land tax. And, Victoria's in a horrible state economically, so they're having to raise all these taxes, and it's going to put investors off for the shorter term. But I still think there's good buying opportunities in there, and you look at how affordable Melbourne is now compared to Sydney and Brisbane. And Perth and Melbourne, as Stuart Wames and I said in a recent episode, would be our two sort of focal points if we were going to look at buying an investment now. So when we also look at how the other areas are going, New South Wales, interestingly, still strong for investors. So there's still driving that up. Still lots of lending occurring there. There must be lots of money over there with the bigger companies. And South Australia is still gradually ticking up. And so interesting to see how that's playing out. But Perth, very strong and still an upward trajectory on our investor lending. Now, first home buyers actually is a very similar story to what's happening with the upgraders, consistent sideways trend in each of the main capital cities, slightly upwards trend in Victoria. So first home buyers having a bit of a run there. Yeah, it's interesting that is staying consistent and underpinning things. And obviously, first home buyers everywhere are motivated to get out of renting because rents are going up and people just want their own home. So inflation, let's check in on that. There's been a sharp decrease in the annual inflation. We're now down to 3.6%. And the most recent quarter, we had 1% inflation for the quarter. So if we annualize that out, it would come to 4%. So we're still not quite consistently within that 2 to 3% target band that the RBA tries to keep us within. But we've definitely come down a lot from our 7.8% annual inflation that we had at one stage there. And the last quarter before this one, we had a 0.6%. So the RBA thought we were on track, but now they're just sort of waiting to see because it jumped back up to 1% for the most recent quarter. And they're just waiting to see, is this going to stabilize? Is it going to keep trending down? Or they may put the brakes on and throw another interest rate increase if it's needed. But we are nearing the top. It is working. Inflation is looking much better. And this hangover that we had from COVID is starting to wear off, which is great. Now, let's check out the share market. And I mentioned earlier that we've had a decent run. There's been a 9% increase over the past year in the All Ordinaries. That's sort of also leading to a bit of the wealth effect. So when people feel like they've got their investments are doing well, that can flow back around to property too. So I'm no share and market expert, but things are looking very good there. So economic forecast for WA, and this was last updated by our state government in December 23, and very strong sort of outlook ahead for all of our key indicators. Our unemployment rate at the moment was estimated to be 3.75%, and they're projecting a slight increase to 4% over the coming financial year at 24-25. And then marginal increases over the preceding years, 4.25 in the next year, 4.5 and 4.75. So they're also expecting population to decrease a bit on what we had. So they're projecting 2.8% over the 23-24 financial year. Their forecast for 24-25 is 1.8. And I think they're probably going to be under in that forecast again because they were under in their previous year's financial year's forecast, but they're projecting a solid 1.7 for each of the next 3 years after the 24-25. So everything's looking very solid and good still on our economy, and that's really going to keep the jobs on offer, keep the migrants moving over for them, and keep our state being the powerhouse of the rest of the country. And, that's a really positive outlook for Perth there, and it's why the fundamentals are so strong underlyingly. Now, how's our iron ore price looking? Let's check in on this because we are still driven a lot by mining, and iron ore is one of our biggest exports. So we're at $117 a ton, and it's fairly in line with the average sort of iron ore price that we've had over the last few years. So nothing super high, hasn't dived and gone down a hole. So I think being at an average sort of typical price, no news is good news there. Now, where is our population growth actually been in the numbers? The latest reporting for ABS shows that we've had the highest percent of population increase to September 23 with a 3.3% change over the year to that. So that's considerably higher than any of the other states. Victoria was second with 2.9%. And really this population increase is what is underpinning our rental market and our sale market at the moment and our overall economy. So now where has this sort of population come from when it comes to Perth and looking around to the other capitals? The majority has come from net overseas migration. We've had a bit of net interstate migration. You can see that people are moving out of New South Wales, presumably to the other states. We've almost had a net zero change in Victoria. So as many, not many people moving out compared to moving in. And Queensland has had the biggest influx of net interstate migration from the other capitals, with Perth doing pretty well. And we've had decreases in Tasmania, Northern Territory and ACT. So presumably they're either moving to Queensland or moving to WA. Now, let's go into my tips to survive and thrive in this market. So some actions to consider is to focus on buying quality. That's my evergreen statement, because we don't want to compromise at the moment and purchase properties that have negatives that are going to show themselves greater in a cooler market. It's easier to rent a property now and sell a property now that has negatives, so you don't want to compromise on those. A lot harder to rent and sell a property if it has them when things turn around. So you really need to know what's going to be important and what's not. I'd take the opportunity to still get in now before confidence returns around interest rates. I mean, you can see it playing out, can't you? There's a number of buyers in the market that lack the confidence. They're worried about interest rates. They're holding back. As soon as it's clear that we've hit the top of the market, they're going to come in droves, and it's going to take our overall market up a whole nother notch. We haven't even seen nothing yet. So I'd be trying to get in the next 6 months, and you should get some decent growth to insulate you and potentially be able to recycle and get your equity back out, revalue it back out, and potentially do something else before our cycle ends. You know, we've got a client that we bought at the median sort of house price 4 months ago, and he's already had an $80,000 increase. His plan was to buy 2 properties over the next 2 years, and we've been able to fast track that, and we've just bought him a second property. And this is very much because we are buying in areas that are predicted to outperform strongly. We have a very evidence-based selection methodology where we look at long-term history of growth and choose areas that have performed well, and then we combine that with short-term prediction tools using AI and machine learning to choose suburbs that are going to have the best chance of performing over the long term and the short term. And then we use what we call our trifecta criteria, where we look at the suburb, the area, and the property. We make sure that it fully stacks up, and that's going to give our clients the best chance of seeing strong growth in the short term and the long term, and not having these issues when the market turns around and eventually becomes a bit harder to rent and sell. So I'd also consider speaking to us for our buyer's agency service if you're looking to buy in this market. I mean, even us getting you in the, to the right sort of property, we well and truly pay for ourselves in what we charge. And one of the other actions to consider if you haven't quite got the budget for 600K and above for a house is I'd be looking at villas and apartments at the moment. I did an episode back that I've mentioned on why that still represents a good option if your budget is more limited. I expect that rents are going to continue to increase over the next year, so make sure that you keep increasing in line with market and pass on the full increase, I would suggest, because the change in the Residential Tenancies Act is about to come in, only allowing us to increase once a year, so we won't be able to do those smaller 6-month rental increases along the way. So on my properties, I'm increasing in line with market, the full increase, and then it'll be set for the next year ahead. So I'd also consider getting our strategic portfolio plan, and this is going to help you get clarity on the best way to create wealth and reach your goals. And really, I think everyone should have one of these if they're planning to actually grow a portfolio and they want to know the most optimum way to do it. What price do you buy at? How do you sequence these things? How much is enough property to buy? How much is too much? How does the family home fit within all of this? And when and what could you afford to upgrade to? So all of these questions can be answered as part of our strategic portfolio plan, and I do love doing them for clients. So my crystal ball, I think rents are going to continue to increase over the next 12 months with a further 10% rise. Immigrants are favouring Perth. Very attractive house prices and unemployment, and the employment opportunities here. More investors are going to continue to buy, attracted to the low price and high rental yield with good prospects for growth over the next 1 to 2 years. And local investors are starting to finally join in, but still are the minority, which is crazy. I'd expect at least a 10% to 15% growth for inner and desirable areas, and at least a 10% growth for most outer areas. And I've switched that around a bit on my prediction from the start of the year to, I think, the inner, middle, and the upper end areas are going to have potentially a greater increase than than the outer areas over the next year. And maybe I'm calling that too early, but they're just looking like such great value now compared to the outer areas. Still will be increases to the outer areas, but I just think the value is really looking good in that middle to upper end. That's why I'm predicting a higher capital growth. Now, that's just generally across the board. When we go about selecting a suburb for our buyer's agency, we're choosing suburbs that are relatively undervalued. So at any one time, there's suburbs playing catch up to the rest of a price point, and that's how we can outperform the averages in the individual suburb and property selection level. So for further help, consider getting a complimentary sale appraisal. I sell all over Perth and really love what I'm able to do in this market using the skills I've gained over 16 years of selling and getting some fabulous results for people and stuff that you just fall off your chair for some of the prices that I've been getting. For if you've got a property coming up for management, get in touch for a custom quote there at investorsedge.com.au. Join my property investor update if you're not a subscriber. So we also send out details on events and other things that we're doing, not just the podcast. And you also get access to our suburb intelligence reports that we send every 6 months on suburbs that you're interested in. So go to investorsedge.com.au/join for that. And finally, you've heard me speak about our buyer's agency and our strategic portfolio plans. If you're looking to invest in this market, you'd be crazy to do it alone. Chat to us, investorsedge.com.au/invest. And we've got a really holistic service offering now, from the strategy to the buyer's agency to the property management to the sale at the other end. And obviously, we never buy properties that we're selling, so there's no conflict of interest. We're only doing the best that we can by each client that we're representing. So hopefully you've got a lot out of this market update. Share it with some friends. Give us a like, subscribe, and post a review if you've enjoyed things. And thanks for listening. I'll be back with you next week. Bye. Just a reminder, the information discussed in this podcast is general in nature. As we don't know your specific situation, you should always seek professional advice before taking any action. For free market reports on your suburbs of interest and other helpful resources to grow your wealth, make sure you join my property investor update at investorsedge.com.au/join. And finally, make sure you're a member of our Perth Property Investment Facebook group to be part of the conversation with other like-minded investors, get help to your questions, and get a feel for what's going on out there in the market. I'll see you in the group.